All right, what's going on? We're going to go over the Covey portfolio performance. Not too hot. I mean, we are front running a possible reversal. So, I mean, we're negative 20% on the month. We're going to see if that changes. We're short on everything. And right now we had a nice kind of the bears stepping in, so that helped the portfolio a little bit. As long as we don't dip too deep, to where there's a huge squeeze, I think we'll be okay. And I think we could still win first place. Like, if the whole adage of like stairways to the top, elevator to the bottom, I mean, we're positioned short on everything, especially volatility, or we're long volatility. So, like, if anything, that would launch us to first place right away, immediately, if we were to have a lot of volatility. So we don't know what's going to happen. We got math cycles telling us like it's around the corner. We got institutional bias saying it's around the corner, and it's either going to be this month or February. February is the next rate hike meeting. This month we got Powell. We got Powell speaking tomorrow, and then we got CPI Wednesday. So it might be in the bag by Wednesday as far as the top. So we have to kind of just play it by ear. We have to use probabilities and making our losses small, and at it, while still tapping into the swing of a high risk to reward for a big home run. So, but with this Covey portfolio, you're just kind of locked and loaded, and that's kind of what I am. As far as like those who are investing, they aren't really tapping into leverage, or they're big, they diversified in a large amount. I got 10 positions, and I got a gross of 429%. So this could be the death of me, or it could be a make or break it kind of deal, and that's totally fine. With this kind of event, I'm cool with it. I'm cool. That's what do you call a trader who holds on to a losing position? An investor. So, I mean, this is kind of what this is. It's an investment over a 1 month period. So we're losing, but hey, there's a probability we can come out on top, first place 2 months in a row. We did get in that Real Vision group, so that's kind of cool. Adds some more credibility to the game. And our goal is to get in the top 5 spot of all time. We're in the top 3%. We want top 5% of all time, and that's the next goal. And I think we can get there. Nothing's changed on the positions. Kept it simple. So the reason why the percentages have changed is because of the pullback. So UVXY is 100% of the portfolio. It's a little more because the portfolio has shrunk because of the pullback. SRS 40%, DRIP 40%, ETH 20% short, Matic 20% short. Being killed on the crypto. Ethereum Classic 20% short, Atom 20% short, Engine 20% short. So that means this thing pumped pretty hard, and Sand did too. They're all 20% short, and then Chevron 40% short. So I don't know why. Did I do a big size on Chevron? I don't remember. I think I remember 40% short on Chevron. So maybe it went up a little bit. When we look here at this, maybe we wicked up a little bit, but we're kind of counting the days. I think the days are numbered. Maybe resistance here, deviation, resistance, and then it breaks the 4-hour order block here. This is ExxonMobil, but I've compared ExxonMobil and its chart to Chevron. They look exactly the same. So we're going to use the indicator from here because we can't get Chevron on this broker. And the broker that we did get it, I mean, it didn't even show any like actionable signal. So because they look exactly the same, we're using this one and this order block as a breaker for the signal to the short side. So that tells you how early we are. We are holding through drawdown. We're holding through pain. We are super early, mostly because I want to just trade. I don't want to have to focus on the whole portfolio on when to get in, how to scale my position. And this game works in such a way, if you were to ladder in a position, it just it like restarts your whole position. It's weird. You can't just add. You actually have to like restart the whole position. And I would just rather just keep the position where it is. I bought it on the monthly open or near the monthly open, and that's the position I'm going to have. I'm going to hold it, and that's what I'm going to do. And we're going to go through some pain on the equity curve. It's going to have a nice drawdown, but that's kind of what we need in order to really show that we're holding winners at the end of the month, and that's not a guarantee, but it's a probability. There are no certainties, there are only probabilities. But that's the Covey portfolio. As far as like the Apex or the Ninja portfolio performance, we are out of the yellow zone and we're in the green zone. And the goal is to get to the far side of the green zone. The target is 53 grand. We're at almost 51 grand. We took a trade on these two accounts today, profiting $100 each account. So that explains why, these two, I think, maybe it's 26 and 27. I don't know why, but for some reason, 28, Apex 28 is higher than 27. But from what I remember, I traded on 26 to 27 today, and $100. Maybe it hasn't registered. And I think this has a lag of a day. But we're up and to the right. It looks like we were negative $200 or $300, and then it makes it to where we've had to bounce back by 1,000. So it looks, right here it's saying that we have a gain of 1,000 on each account, and we need to get to 53,000. So we're almost $2,000 away, and then we get a real live account. And the goal is just to keep on stacking them because you can build equity in them, and it's relatively cheap and high leverage. I mean, for each account, you enable yourself to get a raise or expand your income. So it's high scalability. But that's that. We dumped the 300K accounts, the 6 300K accounts. With a target of $3,000 comparatively to a target of $20,000 profit, the $20,000 is going to take forever. Like, I've made it to 10K profit, but 20K profit is another level. And with a trailing drawdown, it's incredibly difficult for such a long game that you have to play. And so, with something like this helps you just go low and slow and just teach you for a cheap amount. I mean, technically all the accounts are weighted the same. At the beginning, they're not the same, but once they get past the trailing threshold, they're all exactly the same. And obviously, there's inherent caps on how many contracts you can trade, but that's the main thing you should look at, is pretty much the cap of the contracts, what's the cheapest and most efficient, and then a good amount of trailing drawdown. And so I got the 50K. Of course, you could see it in the top on the far left. But technically, the 300K account doesn't really have 300K because all of them actually start at zero once you cross the trailing threshold. So it almost makes it so that the label of how much is in the account doesn't really matter, because they all start at zero once you pass the trailing threshold. And why not get there quicker by using a 50K account? Boom. So that's the Ninja Portfolio Performance Summary. So I ditched those 6 accounts. Daily and closing thoughts, S&P 500. Oh, we'll separate the video. Like, I would think that will help cut down the time. So this was 10 minutes. So we're going to end that, and we get into the daily closing thoughts.